What's going on, guys, and welcome back to my channel. Now today we're going to be taking a look at my trading account. So I made a video a few years ago looking at my trading account after a few months of trading, and basically I'm going to do a follow-up on that video now, show you some of the trades I've made, both good and bad, and basically just see what state the portfolio's in now. So for a bit of context, when I originally opened the account, I started off with around $4,600 and I haven't added any money since that point. So essentially all of the growth on the portfolio has come from trading, with the exception of around $700, which I've made from the Trading 212 referral scheme. So going into this, when I first opened the account, the overall strategy was really to deposit a smallish amount of money to treat as a bit of fun and to try and learn a skill, which is trading, because it wasn't something that I had a huge amount of experience with. I've always been more of a long-term investor rather than a short-term trader. But I just basically wanted to give it a go with a small amount of money and see if I can make some profit. So effectively the benchmark is trying to outperform some standard indexes. So for example, the FTSE 100, S&P 500 and NASDAQ 100, which are the main ones I compare my overall investments to. Now the kind of stocks that I've been investing in are almost exclusively large US tech companies. The reason for this is that a lot of them are relatively stable over a long period of time, but also have quite a lot of short-term volatility, making it optimal for trading, but also trying to offset some of the potential for really big losses. The other reason I've been investing in just US companies is that I've got my Trading 212 account set up in dollars, so it makes it really cost effective for trading these US equities, because there's no currency conversion or trading fees. The types of trades I've been making are predominantly swing trades or position trades, which are effectively mid to long-term trades. So that could be buying and holding for a period of time of around a week to maybe 6 months or so. But I've been trying to stay away from day trading just because I find it too time consuming, and I don't really have the time to be watching the market in the way that you need to. Also, when I've been going into positions, I've been trying to avoid going in with 100% of the portfolio value. Instead, I've been using smaller amounts, keeping a large majority in cash. This is to try and manage my risk to make sure that I'm not too heavily invested at any given time. And no matter what the market circumstances are, I've always got a bit of buying power. So that effectively covers the overall strategy and what I'm trying to achieve. So now let's get looking at the portfolio. So here I've got up my Trading 212 account on my phone. So you can see the total current value is sitting at $8,356, which is quite significantly higher than the original deposit. Currently, I've gone in with a few small trades into some things, using a very small percentage of the total portfolio. So I've got 2,564 invested with $5,791 in cash, just ready for an opportunity basically. I'll explain some of the thought processes around these shares at the end. So also on the app, you can see my current realized profit is $3,768 with a whopping $9 in dividends and $31 from interest I've been earning on the cash. Now the deposits and the withdrawals have gone a bit complicated, which I'll explain later on, but that just gives you a quick overview of what the account looks like. But there's not really a huge amount more that this app can show us without a bit more digging and a bit more context. Now annoyingly, Trading 212 doesn't show you an overall chart of your portfolio value, which makes it kind of limited. So I'm now going to head on to my investment tracking spreadsheet, where we can basically track my overall portfolio value against some indexes. So here we are on my investment tracking spreadsheet, which is a free download on Google Sheets if you're interested. I personally find it really irritating how limited a lot of these investment platforms are in tracking your overall progress. You can often see your profit and losses on certain stocks, but it's really difficult to quickly gauge how you're doing compared to the overall market. So effectively what this spreadsheet does is it requires you to input your just overall portfolio value at the end of each month, and it compares it to any desired indexes that you have. And it takes into account any deposits or withdrawals into your portfolio, and also treats your chosen indexes the same, so you can accurately compare them to one another. Now honestly, I've been a bit sloppy with tracking this portfolio, and I didn't actually do it from the start. But I know what my original deposits were and when, so I can start from that point. And as no money's been added since then, I can effectively just fill in the blanks. So that's what all of these red numbers are on the left. And I've also compensated for the money earned from free shares. So I first started tracking this account properly again back in December of 2022. And so you can see here at the end of every single calendar month, I just put in what the total portfolio value is and if there have been any additions or withdrawals of cash, which on this account there haven't. So it keeps it nice and simple. Now the best way to look at this is with the charts. So on the charts tab, we have this one here. So I'm the blue line here. Then we have the FTSE 100 in red, FTSE 350 in yellow, S&P 500 in green, and NASDAQ 100 in orange. So the NASDAQ's obviously the most volatile, so you can see that orange line going up and down quite significantly, and the other indexes are all fairly flat. So if I'd invested in the NASDAQ when I first opened this account, I'd be up 24%, FTSE 100 25%, S&P 22%, and FTSE 350 21%. But my portfolio is currently sitting at 68% in profit, with an all-time high of 72%. So I'm pretty pleased with that progress, to be honest, and I have beaten my target of outperforming the indexes. Okay, so now we've seen the overall progress, I now just want to go into some of the key trades where I've made the majority of the profit, and also some of the stupid things I've done that have made some serious losses. I'll put some screenshots on screen of all the trades that I'm talking about, and at the same time I'll be showing you guys what those buys and sells look like on the charts for those stocks. And I'm going to be looking at those charts on the Webull platform, as I find the charts really useful in being able to analyse stocks from a technical analysis point of view, and I find the whole platform just really easy to use. With that being said though, if any of you guys want to sign up for Webull, don't feel like you have to, but my referral link is down below in the description, and if you use that link you'll get 2 free stocks valued up to, I believe, $1,000. But anyway, let's get back to what we were looking at. The first trade I want to show you guys is probably the most risky one that I've taken, which hasn't been too detrimental but also hasn't really paid off. The stock I'm talking about is FaZe. If you haven't heard of FaZe, they are the first gaming organisation to be publicly trading effectively. And over the last year or so, their stock has done terribly. So the way this stock launched onto the market was through a SPAC deal. So initially the stock was listed as a different ticker by the SPAC company, and they then had a merger with FaZe and eventually changed the name. So you can see before the deal, the trading value was around $10 a share, and it was pretty much a nothing company until the name change. Then once it launched, you can see it had some serious traction, where the value went up from $10 a share to a high of $24, which is 127% in growth, which is pretty decent. Now, I initially bought in with around $1,500 before the name change, so it was around $10 a share, and then sold when it doubled in value in August, where it went up to $20 a share. And I just put a limit order in at $20. My logic was, after doubling my money, I'm going to sell half, so basically to take back what I put in and just let the profit run and see what happens to it. This was a very risky investment, and the only reason I bought it in the first place was purely because of hype, and I didn't think it would necessarily be a good long-term investment. I just thought there might be some money to be made from the hype, which did end up being the case. So after I sold half, you can see the share value has plummeted, and since I originally bought in, we're down around 98–99%, which is pretty shocking. Overall, I'm sitting at a $157 loss on this investment, plus the current value of the investment, which is practically nothing. I've got no intention of selling these remaining shares, as it's only $13, so it doesn't really matter, but I might end up selling them later on in order to put that loss on my tax return. Next up, we have Netflix, which has been one of my most profitable trades. So again, looking at the day chart, you can get an overall view of what the stock's been doing over the last few years. As you can see on the chart, Netflix has been a pretty solid investment up until around the start of 2022, where we saw a huge drop of around 74%. So when this happened, I was thinking this is an opportunity which I need to try and take advantage of, get in at the bottom and sell as it's going up. So I tried to catch the falling knife as it was going down in around January, March and April. Obviously I didn't achieve that, as it continued to go down even further, which was another 50%. And then once it got down there and started to stabilize, I started trying to buy more at those lower prices to average down that initial investment. I started to sell at the end of January in 2023, bought some more back in around March, and then I basically sold completely out of the position from May into August, which is up here. So from the very bottom to that top was 140% growth, which is pretty impressive. And I'm quite pleased with how I managed to play this, because I managed to sell some highs, buy some more back in the lows, and then sell on the highs again. And the total profit from these trades comes to around $1,039. The only learning point to take from this is that I should have waited to buy in, as with hindsight, I obviously bought in way too early initially, which is why it's so important to manage the amount of money that you buy in with and make sure that you always have money spare to be able to invest with. Next up, we have Shopify. Now this stock as well has also done very well over the long term. It had a very big correction back in late 2021 from all-time highs to all-time lows, losing around 84%. But up until that point, it had been very consistent, trading above its moving average and generally being a very high growth stock. So again with this one, following the massive decline in value, there was some opportunity to make some money on the potential recovery. And from recent lows to recent highs, there's around 150% profit to be made from this trade. I originally bought in around October of 2022, which is around here. I then upped my position in January, February and March of 2023, which is around here, here and here. I then started to take profit in May, July and August, which is around here and up here. And then finally I sold out of the entire position in late August, early September, as it started to flatten and lack any more growth. With this series of trades, I ended up making around $1,010 in profit. And again, I'm really pleased with how this one panned out. Another fairly significant trade I took was in Amazon, which long term has been a great performing stock, but again, since all-time highs in late 2021, it's seen a significant drop of around 53%. With this one, exact same strategy as the previous two, just try and buy in and ride that recovery. I originally bought in January of 2023 and then started selling in May and then finally closed out the position in late August once it reached these previous highs. So from that low to the high is around 47% in potential profit to be made, and I ended up making $316 in profit as I went in with a fairly small position. Now I'm not going to pretend that all of the trades that I've taken have been perfect, because they absolutely haven't. And with trading, I think that's one of the main things you have to get your head around, is that you're going to take losses as well as potentially make profits. So you have to kind of come to terms with that. Some of the really bad trades I've taken were in Peloton, Alibaba and Coinbase. But the important thing to do is just to cut losses quickly if it's not panning out in the way that you expected it to. And considering that I'm overall still in profit, I think I've done a pretty good job at managing that risk. Now, as I mentioned earlier, the deposits and withdrawals section of my Trading 212 account has got a bit messed up. And the reason for that is that I was actually making a currency-based trade from US dollars into pounds and then pounds back to US dollars. As well as my invest account with Trading 212, I've also got an ISA which is valued in pounds. And you can seamlessly transfer money between the two with very minimal conversion fees. And so effectively last year in 2022 in September, the pound was really weak against the dollar. So I used that as an opportunity to transfer some of my dollars back into pounds and then converted those back into dollars in January of 2023. So from that very simple trade, I would have made around 11%, and that equated to about $400. So that basically covers everything in terms of profits and losses. But now I just want to give you guys a bit of an insight as to why I've got my current open positions and just explain my thought process. So first up, we have Amazon. I've taken a very small position just because it's sold off quite a lot recently, and I think it is likely to recover. However, I think I've bought in a little bit too early, so I have gone in with a fairly small position size. Then we have Phase, which I explained earlier, which I'm just holding purely because there's no point in selling it now. Then we have Netflix, which has also sold off quite a lot recently, and we're seeing that's down around 18%. So I think there's a quick trade to be made there potentially. And on the day chart, it's looking promising as to where it's sitting with the 200-day moving average. So again, I've gone in with a small position because it might continue to get worse, but if it does start to decline below the moving average, I'll probably cut losses quickly. Then we've got Nike, which hasn't done particularly well over the last 6 months. But on a longer term chart, it's looking like a bit of a buying opportunity. And where I've bought in down here, if it recovers to previous recent highs, that's about 30% profit to be made. And if it recovers fully, that's around 80–90%. And I just think it's a solid company which is a little bit undervalued at the moment. However, with that being said, if it does continue to decline and break below these previous lows, I will be cutting my losses. And then finally, we've got Shopify, which hasn't done brilliantly recently and looks like it's starting to decline. However, it's not significantly broken its previous pattern, so I see this as a potential dip buy opportunity, but also I wouldn't be surprised if it continues to sell off. So that's why I've gone in with such a small position. So overall, I'm pretty happy with how this portfolio has progressed over the last few years, and I think carrying out the process, it has taught me quite a lot. So I think some of the biggest learning points to take from it is to manage your position size. So for me, going in with smaller amounts and leaving yourself with buying power if the market continues to decline is a good strategy. Also, it's incredibly important not to get too greedy, so make sure to sell when you're in a profit and the market looks overvalued. You can always hope that the market's going to continue to go up, but it's always good to sell when you're in a profit and at least take some of that money out. I also think it's really important to have a bit of context about overall market conditions, because quite often this can be one of the most significant factors. And finally, it's so important to cut losses if your trade isn't going to plan. You should never hold a position and be hopeful if it's not panning out in the way you expected it to. And unfortunately, making losses and having to cut losses is just part of trading, so you have to just get used to it. So moving forward for me and this portfolio, I'm going to continue to try and trade in the way that I have been, but I'm also going to deposit some more money so that I'm trading with higher volumes. So effectively, I can hopefully make some more money. I'm also going to be trading more and more on Webull, and I'll be making some videos around the platform, giving some basic tutorials on how to set it up and use it in an optimal way. I'd also like to set myself some trading challenges, so maybe start day trading for a month and see if I can turn a profit. So if you're interested in following up on any of those, make sure to hit that subscribe button down below and click that bell so you never miss a video. Also, if you do want to sign up for Webull, there'll be a link down below in the description where if you sign up through that link, you'll get 2 free shares valued up to $1,000. Also, if you want to get an account with Trading212, there'll be a link down below as well for that, where you'll get 1 free share if you sign up using that link. But always remember, with these platforms, investments can increase and decrease in value, so your capital is at risk. But that pretty much covers everything for today. If you did enjoy the video and you made it this far, please do me a favor and smash that like button down below. Drop me a comment down below as well, what you think about my progress. Do you think the returns I've made are worth the effort, or do you think it'd be better off passively investing into ETFs and funds? Let me know your thoughts down below. But with all of that being said, take it easy guys and enjoy the rest of your day.